it is going to make a lot of money. I believe Red Mountain's the best undeveloped gold deposit in Canada. It's got the highest grade. The first 2 years, the resource grade's 10.5 grams per ton, 540,000 ounces of measured resources.
This is Jay Martin.
Rob, it's great to have you back in here. 2 years ago, we sat down for the first time in the studio.
Yeah, great. Thanks for having me, Jay. Yeah, 2 years ago, it was with Nations Royalty.
Yep.
Launching Canada's first majority Indigenous owned public company with our partner, the Nisga'a Nation. And I still maintain it'll be the biggest thing that I'll ever do in my career.
For real? Okay.
Yeah.
Okay.
Yeah, it's just watch what this company is going to do.
Oh, dude, I love that.
Yeah.
Okay. Well, maybe we'll close the loop with that then today, because I'd love to get a follow-up couple pieces from you on that. I know you're on a new mission today, and so we're going to unpack that a little bit. And I'm very excited about it because I've been calling it the Rob McLeod homecoming. You're going back to a project that I think your heart's been married to for a long time, and a lot of deep pedigree and history in this region. We'll get into that. We're talking about the Golden Triangle and some things there. Where I wanted to begin today, however, was to introduce the Fiore Group to my audience. And they're very familiar because I'm a shareholder of a lot of what you guys do. And I'd love to explain why, but over the last few years, Fiore has emerged as arguably the leading capital and advisory group in junior mining in Canada. Right?
Certainly. Yeah, we are that.
You are that. I love that. Okay. So walk us through, what is Fiore today? Who is Fiore today? And what's the role that you play in the industry?
Fiore was started by Frank Giustra and his partner Gord Keep decades ago. And, the pedigree is that those two gentlemen, and Frank's called our spiritual leader, have started some of the largest mining companies in the world. And tremendous amount of experience in terms of what is required to make a successful mining company. When myself and Sean Kuhn and Ryan Waymark moved into the Fiore office and partnered with Frank and Gord about 4 years ago, our vision was to maybe recreate some of the magic that made them successful in previous cycles. Over the past couple of years, we've really sort of developed, a niche with some of our real core strengths, which is, first and foremost, it's technical. We have 45 mining engineers and processing experts and permitting experts that work in our office through Ryan Waymark's Hughes Advisory. So we have the engineering team covered. I'm a geologist by training and have geological team that specialize in, all corners of the planet, all aspects of geology, particularly in evaluating deposits and mineral resource estimates for upside. Mm-hmm. And then, actually as important, because you need all of this to make successful companies, is the capital markets expertise, where you have Sean Kuhn, who has one of the best networks, I believe, globally for this space. And we've been able to raise hundreds and hundreds of millions of dollars. I'm not sure exactly what the total is. It's well over $1 billion over the past few years to target growth-oriented companies. And where we've been specializing in is seeing value where others don't. It started with West Red Lake gold mines, which that was about 3 years ago. 3 years ago, actually, this month, where we went and picked up what was, at the time, it was the most hated gold deposit by far in Canada. It was previously managed under Pure Gold, and people had, like Eric Sprott, lost over $100 million. People hated this thing. We went out to see what had happened, and it was really clear what mistakes were made and how we could take a different approach. And, that we followed that up last year in terms of restarts or buying projects out of bankruptcy by partnering with the Selkirk First Nation. Their traditional lands host a copper gold deposit called Minto in the Yukon. And we saw why the previous company, Minto Metals, there failed. Undercapitalized, not enough drilling, not being thoughtful enough, not having appropriate dialogue with community, and not including the Indigenous partner. And we launched Selkirk Copper Mines in November of 2024. And that partnership with Selkirk, it's another kind of pillar to our group. I started Nations Royalty with the Nisga'a First Nation. And I believe that to have a really successful mining industry in Canada, having Indigenous partners with skin in the game is really the way to go. I grew up in a small rural community where there wasn't really a lot of opportunity aside from working really, really hard and working your way up in operations. There's no reason why people from small communities, particularly that are Indigenous, cannot be CEOs, cannot be major shareholders of mining companies. And so economic self-determination for Indigenous groups through natural resource is another passion within the Fiore Group. And so what that has done, and we've been able to attract tremendous talent that want to come here and work within Fiore. We have an incredible amount of deal flow. We mostly generate our own ideas, and we've made it a very good and positive working environment. And through that, through all of our companies, we've added a tremendous amount of value for the shareholders, which has to be your number one priority in junior mining.
Yeah, 100%.
Yeah.
And, I've had your founder, Frank Justra, on the podcast a few times.
Yeah.
And yes, him and Gord keep some of the biggest companies in the mining sector, Wheaton, Endeavour Mining, et cetera, the spiritual leaders behind Fiore. But yourself as the geologist, Ryan Waymark as the engineer, Sean Kunkun as the capital markets navigator, kind of lead the charge today, right?
Yeah, correct. And, what's also important is marketing. You can have the best story in the world. And if investors don't hear about it, they're going to ignore it. So, being out on the road to meet investors, to come on shows such as yours, Jay, to appeal to investors that are looking for, the potential to make a lot of money in the natural resource space, is we have all of that plus more. And, honestly, we're just getting started. We have big ambitions for the companies within the portfolio.
I was a shareholder of Pure Gold. It actually makes me feel a bit better that Eric Sprott lost $100 million because I took it on the chin with that company and had to do a lot of soul searching when I went back in under new management, under Shane Williams, because when you get burned like that on a project, and I was very close to Marco Day the whole time, and we had a lot of conversations, and I feel like I had a better understanding of what actually went wrong than what the market was claiming. And I think he was culpable 100%, but still going back in, believing that the rocks haven't changed. The project is still there, right? This is a confluence of errors, both environmental, meaning this was a tough time to manage a company. We couldn't travel during those years. There was a lot going on, a lot of blind spots. Well, anyways, it is what it is. I got back there with Shane and am now a happy shareholder of West Red Lake Gold. I didn't realize the number of engineers that you guys had under your roof. You said around 45,
yes,
and there's nearly 100-person headcount. So almost half the team are mining engineers.
Yeah, and pretty well all of them have a specialty that can help us. That, some are experts in open pit, some are experts in project management, some are experts in economic modeling. Some are experts in underground mine design. And so, if you have, say, an opportunity that has a particular challenge, is that, Ryan can put his team to work and to say, okay, hey, we see this opportunity here. This was ignored. And similarly, geologically, like one thing that we see time and time again, and this is back to West Red Lake, is, the gold is there and the resources are there, but it's the classification of those resources which so often gets missed. There's a lot of gold at Madsen, but they didn't drill it on tight enough centers, or they used historical, projections rather than drilling the holes on a spacing where a mining engineer can design a mine plan for them to go in and stope it with minimal dilution. And so you can get that gold at a low enough cost. And so at West Red Lake, it wasn't drilled enough. And what Shane and his team have done is they've delineated, enough resources to have a couple of years of measured, which translates to proven resources ahead of you at any given time. And so, it's an important thing for investors to look at. If you're looking at an advanced stage development project, particularly if it's underground, how much is their resource inventory in measured, which translates after a pre-feasibility or a feasibility study into proven?
Yep.
Because that's the type of mineralization you're going to go in and mine. In the case of Cambria Gold at the Premier mine, went in and drilled on 25-meter centers and went in to go and mine it. And sometimes the previous management team got lucky and they found some gold where they thought it would be. Most of the time, it was above them, below them, off to the side, because veins are never truly straight. They move around a little bit. And so you have to drill on the appropriate centers to have the highest confidence in your data before you go in and mine it. So it's a mistake that management teams have made, particularly over the past 20 years, time and time again. Rubicon Resources was probably the most extreme. Get a high-grade intercept over here, high-grade intercept over there. You connect the dots thinking they're continuous.
Yes.
It's a little pod over there and a little pod over there. It wasn't continuous.
It wasn't what they thought it was. Yeah.
And so, within Fiore, we have a team that can review these type of mineralizing systems to see, yes, this is maybe a risk or it hasn't been drilled enough or what. And, one of the commonality too, between West Red Lake and Selkirk and Cambria, all undercapitalized. And, that was one of the biggest lessons we learned from West Red Lake is these things always take longer and they always take more money. It's the reality.
Yeah.
And so, in the case of Cambria Gold Mines, when we raised 190 million, it was, to give us what we think we need plus more. And always tell.
Because it's mining.
It's mining. That stuff's going to come up. Always tell your investors what your biggest elements of risk are going to be.
Sure.
They need to know it. They don't want to learn about it in the press release.
Okay.
And so if you can give them the heads up, hey, the execution risk on this might take a little longer, or, we think we need 10-meter space drill holes and maybe you need them every 7, is at least you've flagged where you see some of the risks.
Okay, so to get to Cambria, formerly Ascot Resources, this is the same blueprint we've just talked about a couple times, right? West Red Lake Gold bought the Madsen mine for pennies on the dollar after hundreds of millions of dollars had been invested in infrastructure, right? The mill was there. Yeah. I think when I sat down with Shane for the first time, he's like, it still has that new mill smell. Like it was brand new, right? State of the art. Similar with the Minto mine, that's Selkirk Copper Mines under Colin Jodry, great guy. Had him in here in the studio as well. I'm also a shareholder. And, the benefit of these projects is that you are effectively buying into advanced exploration without the construction costs ahead of you, because those are sunk, right?
Correct. And the execution risk.
And the execution risk.
Yeah.
Now it comes with, call it like the shadow of failure tax. You may have to reprove this to investors who got burned the first time, right? And so this is what you're now doing with Cambria. Same blueprint, buying a pre-producing mine, a historic producing mine, and you're going to resurrect this, right? That's the game plan with the Premier, with Red Mountain. Those are the core projects at Cambria. What's cool about this is your history in that area. You grew up in Stewart. That's the town right there. Your father and your uncle, I believe, worked on both the Premier and Red Mountain. Is that right?
Just at Premier.
At Premier. Okay. But you worked at Red Mountain in like the 90s, did you?
I worked at both. My first job ever in mining was I worked as a mill operator for one of the previous incarnations of the Premier deposit when it was an open pit operation owned by a company called Westmint. And so, I was a young kid learning about milling, learning about mechanics and plumbing and that sort of thing. And then I graduated from university in geology a couple of years later, and my first job was at the Red Mountain deposit as a junior geologist when, the current production size decline, which accesses the ore body, was being driven, and learned a ton about advanced stage projects. And actually it was, the plan was to build the mine at the time when Lac Minerals had it. And so, these deep roots are very, very important in terms of being able to execute, on our vision for Cambria. I'm a student of mining history. I love reading old reports from the government or from mining companies. And the Premier mine, like, it's legendary. Like, it's produced over 2 million ounces historically and of gold and over 40 million ounces of silver at spectacular grades. For 15 years, it was the richest mine in North America, dividend paying, owned by the Guggenheims, tremendous a bonanza.
And what was the timeline there, that 15-year horizon?
The ore body was first discovered in 1918.
Right. Right.
Actually, there's some float discovered in 1917, and it's a wonderful story. I'm inspired by the fortitude of these pioneers. The guy that discovered it, he could find all this tremendous high grade float on surface in a tree covered area, and he was frustrated because he could never find where it was all coming from. So he drove a tunnel blind, which he just said, "I'm going to dig here." And within a few meters, he found the bonanza. And then, it was like all through the Great Depression, the rest of North America was suffering into the 1930s. It was still a tremendously rich mine. And so, and then, also there's the big Missouri deposit, which is nearby. That was developed by Caminco in the 1940s. It was an innovative underground bulk mine in an era post-World War II where there's a lot of inflation and no movement in the gold price. They didn't make much money. They didn't actually make any money. But it's that history of both deposits that not only inspires us, it informs us of the best approach to take at these ore bodies. Mm-hmm. Like Big Missouri was big stopes. The previous management team tried to go in and high grade it. Remember what I just told you about connecting the dots of high grade drill intercepts?
Yes.
You can't do that. You need to put that into the context of the ore body. And this is a 30 meter wide flatline quartz breccia. They mined it was 2 or 3 grams per ton. Previous management team thought it was 8 grams per ton. They went in to mine it underground. What did they find? 2 grams per ton. This is in 2024.
Okay.
Gold price has doubled. 2 to 3 grams per ton at 30 meter thicknesses is very interesting. Mm-hmm. So why should we do anything different than what
I want you to unpack that a little bit, because the obvious question, given the history, is why isn't this thing in production today? And you're touching on that right now, but what exactly happened, Rob? Like, what created the opportunity that you guys were able to pounce on here?
Sure. So there's a few things that, and hey, this is a glass houses business and sure, we can always look back in hindsight, but, we did see this within the Fiore team, particularly me and Ryan. We saw this coming for many years.
Leading up to
this. Yeah. And, you can ask Frank, years ago, we were saying, hey, we might be able to pick up Premier in a couple of years because what they're doing is going to fail. And so they built the mill. It's a large mill for an underground mine. It's 2,500 tons per day nameplate. You can get it up to 3,000 tons per day. And so the management team really focused on building that mill because they wanted to produce a lot of gold. They wanted to produce many ounces. The issue they ran into is twofold. First of all, they started the underground development much too late. To feed an underground mill that size, you would probably need about 24 different working phases. So these are different individual areas where mining teams would be working. In order to have that much underground development, they would have needed to start doing development much earlier.
And that's because if the capacity of the mill is 2,500 tons, it kind of handcuffs you close to that number. Like, you can't underfeed a mill. Right? Just for people, you can't put in 500 tons and it works just fine.
No, the ore, this type of mill, the ore self-grinds itself. It's called a SAG mill, semi-autogenous grinding. And so you need to fill it. You can't, as you say, just half fill it. So they started way too late.
Because that's a very big mill. I think it's like twice the size of West Red Lakes mill, for example.
It's more than that. Okay. And additionally, they ran into the geological problem where they built the mine just on indicated resources, not measured resources.
Okay.
And when they did the underground development to get to areas they thought they could mine, the grade wasn't there. They hadn't done the proper geology. And this is again where I could see it failing because there's 100 years of mining history. This wasn't, just a geological opinion. This is what the old timers used to do. And they were good. They didn't focus on tons. They focused on ounces. They focused on making money. Mm-hmm. And so the approach that we're going to take in terms of the resources is making sure they're drilled enough, making sure there's sufficient underground development, and making sure there's sufficient tonnage to be able to fill that mill. Now, the difference approach that we're taking is we are developing the crown jewel of the 4 deposits that are in the portfolio, and that is Red Mountain. Red Mountain has 540,000 ounces of measured resources. Mm-hmm. It has been drilled from both directions. It's called scissor drilling. It's been underground bulk sampled. There is no questioning the grade and tonnage of the resource because it has that sufficient drilling. There's already significant underground development that's there. It's the first 2 years worth of mining averages 25 meters wide. It's like higher than the ceiling here. And so you can have the tons that are going to be required coming from that mine trucked through my hometown of Stewart in Hyder, Alaska, up to the mill for processing. So there's going to be sufficient ore coming from Red Mountain, which will be blended with ore from the Premier mine to have a nice minimum of 2,000 tons per day feeding that mill, which is kind of the minimum required to feed that SAG mill. And I believe Red Mountain's the best undeveloped gold deposit in Canada. It is. It's got the highest grade. The first 2 years, the resource grade's 10.5 grams per ton. And at those thicknesses, you get minimal external dilution. And it is going to make a lot of money. Good metallurgy, very good ground conditions. Okay. Everything that you need to have a successful mine from an operation stage.
So safe to say, previous operator, the core mistake they made was they moved a bit too fast, right? They maybe moved to production prematurely given the size of the mill they'd built, and they weren't able to fill it and ran into problems.
Correct.
Right?
Yes.
Maybe got a bit excited. 2020 was a great year for the gold price. Didn't last long, right? Mm-hmm. But it got a lot of people excited. And so
yeah, and they were excited. They got great investors in. Yeah. They got Franklin Templeton, which is one of the top.
Still a shareholder today.
Still a shareholder, second largest shareholder. Yeah. The largest shareholder, which they're a wonderful mining family out of Peru. The company is called Coriapo.
Coriapo.
Yeah.
Okay.
Yeah. They operate the largest privately owned mine in the country called Poderosa.
In Peru.
Produces over 300,000 ounces, going to 400,000. They're our largest and most supportive shareholder, as well as part of our equity raise that we did. It's really a who's who list of long institutional investors, including some that date back to mine and Ryan's previous company, IDM Mining, mm-hmm. that have familiarity with Red Mountain, familiarity with the management team. And this was actually a vision that we had sold them back when Ascot acquired IDM Mining in 2019, is that develop Red Mountain and the mine would make a lot of money. So that's what we're doing. Okay.
And so the high level, the big difference in your approach versus previous operator is you understand that the key to success for this project right now is Red Mountain contributing feed to that mill.
Yeah, the vast majority of the ore.
Over 500,000 ounces of measured, which is like 70% of the total resource, I believe, right?
Yeah, it's a little under 800,000 ounces measured and indicated.
Measured and indicated.
And again, it's at a tremendous thickness. It's up to 100 meters wide in places.
Okay.
And so it is the execution risk on mining that ore body, or to have enough working stopes, is much lower when you have a deposit with that size and that continuity. Okay. And so that will reliably deliver the tons to the Premier mill. And then we can augment it, whether it's with high grade from the Premier mine. And, I can take you underground, today, Jay, and I can show you a face that was the last blast that the previous management team took before they ran out of money. And it averages 300 grams per ton gold. Like the Premier, that's the granddaddy. That's bonanza grades there. And so we can either blend it with that high grade from Premier.
Yes.
We can blend it from bulk mineable resources from the Big Missouri deposit, which we're actively remodeling. And this is going to include, open pit resources, which weren't contemplated previously, and at a lower cutoff. We believe we're going to have lots of options for, what ultimately we believe will be a hub and spoke mine and mill operation.
Yes.
Servicing the Golden Triangle and further afield.
So walk me through the sequence of events then, because there's a lot going on for people to grab onto, right?
Yes.
Red Mountain is obviously a linchpin. You got some work to do there, right?
Yes.
I think you're building a road right now where you're going to begin to build one. So it needs a road, right?
Yes.
Big Missouri timeline, next term catalyst. What can we expect? Premier, you're putting out drill results right now. So you're completing some infill drilling right now to understand that deposit a bit better.
Correct.
And you're moving towards a pre-feasibility study this year, like fourth quarter of 2026.
Correct. And that it'll be a feasibility study. So,
yeah.
So
it'll be a feasibility study.
We started drilling the Premier area deposits, particularly the Premier mine, on tight enough centers to get enough measured resources or proven reserves for the feasibility study.
Okay.
We are expecting that we will start construction at Red Mountain, starting with the access road, imminently this spring.
Okay.
Yeah, and that will be a tremendous catalyst. The road it's one of the biggest areas of execution risk, but we have some of the top northern road builders, construction experts that specialize in these northern climates to get that access road built. And there's not a lot of underground developments required at Red Mountain to have enough working faces to start trucking ore. But we expect that to be in 2027.
Okay.
And, as you say, probably the biggest catalyst this year will be the updated feasibility study, because that will really truly show the absolutely stellar economics of this hub and spoke mine, because the ore bodies are so high grade and there's so much sunk capital that was honestly funded by previous investors. And so that will probably be the biggest catalyst of news this year.
Yeah, 100%. Okay. Yeah. And what's your expectation at this point, Rob, in terms of that puts us into end of 2026, road completion? I think you said 2027. That's when you can begin to move back and forth from Red Mountain. Do you have your eyes on high level production date estimate?
So we're currently doing trade-off studies to help inform that. Okay. And so we have these 4 deposits. We have a mill that's currently on care and maintenance. Yeah. One thing we want to consider is that even if you're breaking even, it's better than paying care and maintenance costs. And so we are looking at the 2 deposits that have modern underground development. There's over 6 kilometers of recently constructed tunnels at the Premier deposit and at the Big Missouri deposit. Is there enough, or particularly if we look at bulk mineable resources from Big Missouri, to start production early? There's open pit resources that we could quickly mine to help stockpile and fill that mill. So we are looking at a range of starting up in the third quarter of 2027 all the way to the third quarter of 2028. And we're very clear with our investors that we are taking these 2 different approaches. We don't want to run into the same mistake again where we don't have enough ore to fill that mill and we jump the gun too early. Our engineering team is phenomenal. Our VP projects, I think, is one of the top mining engineers and most experienced in the country. His name's Gord Dirksen. He's spent half his career working in operations, half his career working for engineering companies, particularly a legendary one in Canada called JDS Mining and Energy, where he was the president of the engineering department. He has put together a stellar team that is laser focused in getting this thing going. But we want to make sure it's done right, and we want to make sure that we have enough runway to ramp up the project before Red Mountain starts delivering the ore.
Yeah. Okay. So that's an interesting decision. Can you restart the mill with Missouri and Premier before Red Mountain's ready to come online?
Yes.
The short answer is you don't know yet, but that's what you're internally discussing with the team.
It's what we're looking at now.
Yeah.
You know, $5,000 US gold. It makes it a very compelling argument to start up.
Yeah, you have a lot more options than the project did 3 years ago.
Yeah, correct. You can lower your cutoff. There's a lot of, 1 to 4 gram per ton material all throughout the property there. And so we might look at some of these areas, say, hey, yeah, here's several 100,000 tons. We can get rolling on it. And similarly, one of the best ways to supply tons is from open pits.
Mm-hmm.
And so there's a bunch of near surface resources that we're saying, hey, maybe we can target those with some smaller pits and stockpile some more to get things rolling early.
How do you govern your discipline when you think about this new gold environment allows us to downgrade a little bit, right? Mm-hmm. And that's a massive advantage to the operators and the shareholders, but you don't want to go too far. You don't want to get over your skis, right? And the gold market is volatile. Now, you don't have to sell me on the next 10 years of the gold market. I'm highly convicted, and that's why I'm here today, right?
Yes, yeah.
But you're operating the company, right? Yeah. You are the steward of my capital and the rest of your shareholders. So you have to operate with more discretion than I do in this situation. So how do you juggle that, Rob? Like, how do you determine how far we can go? What's a reasonable bet? Walk me through this.
I would interpret your question as, how are you going to minimize dilution? And because when you're not cash flowing, you have a few different options. You can fund things through streaming, royalty, debt, or equity. And so when we closed the $175 million portion of the recent equity raises, we did a $15 million rights offering and $175 million unit deal. There are 1-year warrants that are tied to that financing that expire at the end of 2026. We believe that should be sufficient capital that would bring in over $120 million to fund any additional costs that we might have if the startup takes longer than what we think. And so we are constantly, and this is lessons from West Red Lake in particular, is that always make sure that we are sufficiently capitalized so we don't have to do overly dilutive equity financings if we need money. And, full warrant deals, 3-year warrants, tradable warrants, that sort of thing. Yeah. We want to that is, as my job as a CEO, it's the most, there's many important hats, but making sure the company is fully capitalized. And if you have to raise additional money, that you're doing it in an accretive manner for the rest of the shareholders. So that's, things that we're working on. There's an opportunity. There's a 8.3% stream on the combined operations that's payable to Sprott, streaming, and royalty. We can buy that down 50% of the stream. Mm-hmm. And we are looking at options how maybe we can fund that. That was negotiated at sub $2,000 gold. Mm-hmm. Mm-hmm. And so it's highly, highly accretive to do that. Do we do that early, or do we do that after we've started production?
Is there a deadline on your option to reduce that?
We have until the end of 2028.
Okay.
To be able to exercise that early buy down. We are going to do that. It's just a question of when. And we're really grateful to Sprott, Royalty, and Streaming for giving a 2-year extension to their original agreement with Ascot that they put a lot of money to build this.
That was part of the deal for you taking over the distressed asset. I guess the other option is they get nothing if it goes under.
Well, they were secured.
Okay.
Yeah. And, similarly with Nabari, they were also secured, but they had a convert that wouldn't have worked out too well if it went to bankruptcy. So,
sure.
So we, also as CEO, I'm exceptionally grateful to those two groups, Nabari and Sprott, as well as we needed unsecured creditors to settle for dimes on the dollar. Otherwise, Ascot would have gone bankrupt. It was weeks away when Fiore came in to put together our rescue package.
Yeah, that's the blueprint we've seen now a few times at a Fiore's office.
Yeah, well, with this one, and a lot of, there's lots of groups watching, but they were waiting for bankruptcy. And the big risk with, in this case, if Ascot went bankrupt, and the bankrupt gets stretched out, like things come up, who's going to manage it? Got a lot of snow and water to manage up there, so there's environmental risks. But the biggest one is that Red Mountain's environmental assessment certificate and EIS expire in October of 2028. And if the deposit hasn't been substantially started, construction, they expire and there's no extensions. You have to start over. It's at least another 5 years. The project is dead.
Okay.
And so everybody was aware of that ticking clock to get Red Mountain started. In the case of, as a comparison, our sister company, Selkirk Copper, the bankruptcy process, and this is with full support from the Indigenous group, Selkirk First Nation, full support from the Yukon government, took 2.5 years. Bankruptcy can drag on. And so that's why we wanted to be preemptive to avoid that risk.
Okay.
Yeah. And that's my hometown. Stewart needs to have a large industrial operation there to make the community viable and a good place to live. And so I so badly want to see a successful mine there. It's one of my biggest motivations. See this thing work and have dad and granddad and uncle and everybody looking down on me, cheering me on. I say I got 1,000 ghosts behind me on this.
I love that.
Yeah. Take all the help I can get.
Yeah, no doubt. Well, okay. So this is about a 2-year window here for the Red Mountain, the permit. Yeah.
Yeah.
And just as an aside, something I've seen consistently out of the Fiore office is just a new approach to community engagement, right? That we haven't seen in the mining sector. I've never seen, I'd say ever. And maybe, a history of the mining sector operating from a place of appeasement, to, in Fiore's case, partnership. And I've even heard you say, we don't want the government's help, right? We want to do this deal so everybody benefits. We don't need government assistance and incentives. Let's just make partnerships. And, you practice what you preach with Nations Royalty. Selkirk Nation is the largest shareholder of Selkirk Copper Mines, right?
Correct. Yep.
And so I think the industry is watching that and taking notice and needs to, quite frankly, because, you can't run up against those roadblocks, otherwise. Okay. So Rob, is it too early for you to speak to what we might expect from a production standpoint, moving into, let's say we tick the boxes, we're moving ahead as planned. It's 2028. What are we looking at from an output standpoint? We
would be targeting in a range because you have some really high grade areas.
Yeah.
First couple of years could be in around 160,000 ounces per year if we're meeting that 2,000 ton per day minimum threshold.
Okay.
With 1,500 tons coming from Red Mountain and 500 tons coming from Premier. If since there's additional capacity in the mill, we're filling it from another source, such as Big Missouri, it could be higher than that. So that's sort of the minimum production that we are targeting. All this will come out in the feasibility study. Right now, it's just kind of throwing some numbers around. Yeah. But hey, we are very motivated to put the highest grade material through the mill in the first couple of years as possible to deliver the most value to our shareholders. So, and what we really like is the scalability. To be honest, there's other deposits in the Golden Triangle that could be a really good fit for blending in with our current resources in a hub and spoke model. That's particularly what appealed to Frank Justra as an investor, is that you can scale this thing up. You could, whether it's toll trading or future business combinations, this is one of the few mills with capacity that's accessible. It's located on the BC highway system. It's located on the Pacific Ocean, so you can bring in ore from deposits in Alaska. And so we see a lot of different options for kind of a longer sort of 5+ year vision for the Premier mill.
Okay.
And we like We really like the scalability of it.
Okay.
Yeah.
Okay. So yeah, the big and obvious milestone is that FS coming out end of this year.
Yeah. And that's where, we are targeting to be a very low cost producer.
Yeah.
We will also be updating the resources, which would include a lot of drilling that's been completed in the premier area deposits since the last 2021 update. And we are remodeling things differently. So Big Missouri in particular, we're going to lose grade, but we believe we're going to gain tons significantly. So that it's going to be a huge catalyst for us later on in the year. Yeah. And, as we go through the different construction milestones, whether it's starting the road construction, potentially additional underground development to get going early at Premier Big Missouri, there's going to be a lot of news for our investors to follow along, and we have some very good blueprints in the Golden Triangle, or actually in Northwest BC, for advanced development stage companies that are pre-production and value that we can add. Look at the incredible job that Walt Coles and team have done at Skeena. Yeah. Or Artemis, their ramp up in value before they start production. That is the type of success that we are looking to emulate pre-production for these assets.
Okay, I had Walt on to break down that whole financing package right after he raised it, and very similar take, right? He wanted to ensure they had a healthy buffer just to account for any unknowns along the way.
It's a great blueprint, and because once the market sniffs that you need cash, they're coming for you. You'll get the cash if you have a good asset, but it might not be on the terms that are the most accretive to your existing shareholders.
No, I appreciate your focus on non-dilution. When I asked that question right away, you went to effectively shareholder protection, right? Which is the right answer. Yeah, I appreciate that. Lots for us to revisit over the coming year. Road construction being the biggest execution risk, big cost, but you're moving that direction. It's going to happen, right?
Yes.
And lots of developments on both Big Missouri and Premier, leading to the 2026 end zone, which is that feasibility study and really like the big picture, that bankable document, right? We're really going to understand this project in more depth. It's been great chatting with you.
Yeah, I'm really grateful for you following a lot of the Fiore Group companies, and would love to host you up at Cambria Gold Mines later on this year. Yeah. It's a spectacular part of British Columbia's mining history. You can see the challenges with the rugged topography and the tough weather that you can get up there, but also you can see the spectacular gold and silver that motivates all of us in the sector.
Love it. Yeah. Okay. Thank you, Rob.